So, weekly review for Dow Jones where the system is concerned. This is from Monday, April 8th until the Friday, the 12th of April. Let me just go back and price to Monday to see what we're actually looking at, what we're actually expecting. First of all, it's framing the trade day. How do I go about framing the trade day? That's a real question. Now, what I can see here is range low and a range high. Obviously, I got criteria that would determine whether or not a range low and range high is in form. But the moment I see this range logo, this previous bearish order flow range, it's told me a few things. One, we actually switching momentum, and two, it's time to be to be positioned short in order to capitalize on this momentum switch. So much that a few days prior to this week's open on Monday, we got further continuation that the intention is to actually play short. We're now a new range high was created and new range low was created. So much that the intention is to play towards these range liquidity lows as a result of the already pre-established or pre-framed idea, so to speak. So coming into Monday, the expectation was to play towards these lows, towards these order flow range liquidity lows. That was the true expectation. But it means that we had to be positioned properly or see the relevant switches in order flow that would allow us to say, you know what, it's time to actually play shorts, or the criteria is met for shorts. What was interesting is that on Monday, it wasn't really clear in regards to delivering short. From here, from the moment, say for instance, we clear out this high and then proceeded to clear this high, then we run up. It was still printing bullish order flow for me as like intermediate order flow, so to speak. So much that the idea now was to find a way that you could actually exploit the short idea that was already framed as a result of, say, for example, determining a directional bias. That was where Monday was a bit interesting because it was the news week, the high impact news week, for being honest. So in such cases, this type of price action is well expected. Whereas that you're ranging, and it's more or less unclear. Even though there were instances in this type of price where, for instance, I could see a high being formed and a low being formed along with a support and liquidation, then it might have think, you know what, we could actually play short to this range liquidity low. But one reason that even though this might have looked as though it fit towards the system, so if I kind of draw it out a bit more formally, if it more or less fit towards the system, then where was it taken? I don't like to navigate within price that's unclear. A price that's not the most lucid. It's not enough for me to just get involved in these type of plays, even though it might fit the components, might fit the criteria, but that's where discretion comes in. Where under certain circumstances, you are not inclined, or I am not inclined to play within certain price when I understand how I like to see price delivered and how I like to see like clear proper delivery to navigate within. But as I was saying, this nice and calm, support and liquidation. Support and liquidation, range low being farm, range high being farm, and this would most certainly be a possible entry. But it's interesting because what constitutes my actual range liquidity high and range liquidity low is a couple of components. One being the actual reverse switching order flow that would allow me to think, you know what, we might actually have like a range low being set in place, and that reverse switching order flow would have come here, similar to how it kind of overlaps the idea of support and liquidation. Similar to how it overlaps, the idea of support and liquidation. So much that now I understood that this, as my high, would be the high that I would be looking to play within the overall range. So the range low and the range high being formed. This is where it gets quite interesting as we move forward into Tuesday and the following day, which should be Wednesday. So say for instance we continue moving forward onto Wednesday, really expectations for price to run this order flow range liquidity low, but also play towards the actual like primary target, so to speak. It gets interesting how I label this or how I regard this. Because this could be secondary as well, based on this being primary, but we move. So Monday was very interesting. Nothing for me, nothing taken, because it wasn't clear enough for me to take. And I don't like to mess around within price that isn't absolutely clear, but doesn't properly fit my criteria to the highest order. So we're coming out to Tuesday, where something similar is happening as well. Whereas like you have a range, the fractality gets very wild. Whereas like you're playing a range within a range within a range, you know? Where I like in a confirm where the range low actually is, and how I know the range low is set in place. Say for instance there, if I go ahead now and look for my reverse switching order flow, which comes the moment this high goes, and it speaks to me that the range low is already in place. It speaks to me range low is properly in place. And once I get these situations where I know the range liquidity low is in place, then it's just about figuring out where the range liquidity high is. And the criteria that I have are a metric that I like to use in regards to figuring out where the actual range liquidity high is support and liquidation. Where is the actual support and liquidation? If I had to use, let's say, this previous high and just play to this low, and then I come to realize, wait, the support and liquidation within this range that I draw isn't as clear, then all of a sudden it speaks to me that, you know what, this high that I used as my previous range liquidity high will now turn into my support and liquidation. I would just use the high to the left. The one that's more or less higher, so to speak. The one that's higher and less messy. Less messy, so to speak. Where this would represent like a second trade opportunity where the system is concerned. But as I said, it's not navigating within price that is clear and coherent for me to actually play within, that would fit well towards the entry model or the system as a whole. If we move forward to the next day, this will be Tuesday, we can see we get delivery, we get the mitigation, and then we obviously get the delivery to the order flow range liquidity low targets. So much that we came so much deeper into like the secondary target, so to speak, where the idea now is to play to these lows as well, as per the already established idea that was framed through gathering the directional bias. But what's interesting is that this was a range in itself, again alluding to the idea of fractality and how wild fractality could actually get, where even though it's like you position short because the framing the idea section or the framing the idea component or sequence in the actual overall methodology, it speaks to shorts because of how we actually frame this idea shorts. We won't be looking to play longs, or I wouldn't be looking to play longs. Why? Because it goes against the intention that you already set from the beginning of the week, so to speak. So it means now that for me to take long to this high, I can't just take it, or I can't just expect it to work according to how my system operates, because it will be missing a few components and missing a few like sequence, so to speak. And it's not like me to do that. It's not like a professional operator to actually play that is incongruent or play incongruent with the actual system or the actual methodology. Otherwise, you just end up being a fraud or a hypocrite, you know? Either or. But getting back to what's interesting is that now we got the high in place, the low in place. Well, yeah, a high in place, a low in place, but we don't know for certain whether or not this low is confirmed. But we got the order flow range liquidity low targets right about, I don't know, within, I don't know how much is this, probably like 30 points in, 30 points to the actual target delivery. And then we just move. And then we figure out, you know what, as the day went back on, or as the day like can continue to develop, come right back up. Right back up. What's interesting is that it kind of, or the flow kind of switched to bearish the moment we got, say for example, this low going, and more or less the continuation, where now the expectation is, because this is a range low that's now being created, given the fact that this is where it gets interesting, because this would be like a reverse vision or flow as well, but that's a bit wild in itself. I mostly recorded a video on this, on these concepts as well. But it's interesting where it got two liquidity targets to play towards two order flow range liquidity targets to play towards. And it's all about just sticking to the system, or sticking to the methodology, or sticking to the sequence of events. Where the first step was to frame the idea, and the second step is how you actually get involved. Now, since the idea was already framed, coming into Monday and Tuesday, you realize that sequence already played out. But the next one is actually how you get involved in price development. That's where stuff like the reverse vision order flow, supporting liquidations, and actually confirming the range high, order flow range high, and order flow range low will come into play. But as we can see, as I more or less move forward a bit more candles, you never got that. You never got those sequence playing. Those were steps 2 and step 3 and 4, which 3 and 4 would be the entry and the exit. You never really got those playing. So it's just about remaining steady in these cases. That was my intention. Keep on top of my processes. Keep on top of the things that I know work. I just operate within the set system that I've built and employed through these sessions, or through all these trading sessions that I've been had. So now it's coming into Wednesday. Coming into Wednesday, we understand a few things based on how price developed. You got some information to play off. For one, order flow range liquidity low is set, and the order flow range liquidity high would indeed not be here. Why? Because the support and liquidation is not clear. Support and liquidation is indeed not clear, and in such cases, I don't expect these areas to indeed hold. I expect these to function as my support and liquidation, a play from the actual range liquidity high, so much that this now becomes like a support and liquidation in itself, and the intention is to play within an order flow area that is well positioned. That's the next intention. But what's interesting is that CPI, or high impact news events, even though this would have looked like one of those situations where it would have followed the system and whatever, but still not the clearest for me to operate within. Knowing news events, or these high impact news events, understanding how more or less slippages work in regards to me placing my orders and whether or not my stop loss can get filled, it would allow me not to mess about with such high impact news events, or place limits. Yeah, I know we deliver, but place limits in such cases where it's like 20 minutes, 15 minutes, or 20, 15, 30 minutes before the actual news events happen, or a news event is scheduled to begin. I go ahead and place a limit. But in such cases, I don't mess around with that. Why? Because I understand slippage. I understand what it means for your stops not to be triggered, and all of a sudden 1% turns into -5. It's wild in itself. So in such cases where it might look as though it fitting the model, or fitting the expectation, but the mere fact that we had a news event happen, or let's right on the session open, around the boats on the session open, and session open for like my session, for like my personal trading session, I don't intend to mess around with this anymore, to be honest. I don't intend to mess around with these, placing a limit here, because I understand that price could easily, instead of going lower, you could easily have this nice candle going all the way up, and all of a sudden the -1 turns to -5. Very well indeed. But as you went on, you understood that the first 3 days kind of set the tone for how the week more or less like could play out, so to speak. Where the idea is still framed, the directional bias is still there, that we actually playing towards lows, but now the next step would be to get into how you actually navigate within prices development, how you actually go ahead and see where you can get involved. And that's where Thursday was the interesting day. Why? Because Thursday granted the entry. Thursday indeed granted the entry for the model. And if I could chat right here, like when I was completing my pre-bell directional, or not pre-bell directional bias, but pre-session analysis, then I already understood the directional bias. I understood how the idea was framed for shorts. So my intention is to get involved in shorts, not messing about with longs. Thursday coming very interesting because we got a potential high in place, right? either this side, because I was initially looking at this side, but then I saw this side as well. But what was missing from here at this point, well, more like 7 o'clock when I was doing my pre-session analysis, I realized that the range liquidity low wasn't properly in place. So I already had this as like a as like a already established range liquidity high that I playing within. I already had this as an order flow range liquidity high that I already playing within. So the next step, so the next step would just be to play the entry and subsequently the exit after the range low is actually confirmed. And how we confirm the range low? Simple. Reverse switch in order flow. That's like the signal for me to say, you know what, the range low is set in place and it's all good to go. It's all good to go where the system is concerned. Now we go. Now we go. Now we go. Now we go. How should I do this? How should I indeed do this? Let me just press button. Yeah. But the next step is actually going ahead and playing, figuring out where the range low actually lied. Now you can see we clear this previous low, for example, this previous liquidity low. But then we actually got reverse switch in order flow, confirming the range low, and just about figuring out where the actual range high is. And how I know this was my range high, because if I use, say for example, this is my range high, or even this is my range high, I try to figure out where the support and liquidation actually lie. And where the support and liquidation is indeed not clear, then I just default to the actual high. Where this now is indeed regarded as my support and liquidation. And like these two components, the reverse switch and order flow, along with support and liquidation, that's essentially the entire framework, to be honest. Or the confirmation for the entire framework. That's how I know I have a range high, and that's how I know that I have a range low. Yeah, it's very interesting. I don't intend to do much editing on this video, but doing it raw as is. But say for instance, this because my new low to play from, so my new order flow range liquidity low, and I already understand where the order flow range liquidity high, so I can just go ahead, use my pricing range tool to figure out where you actually can get the entry. The entry step 3 in the sequence of events. Step 1 being framing the idea. Step 2, determining how you actually get involved in prices delivery using concepts such as, say for example, the support and liquidation, along with the reverse switch and order flow. And then step 3 will be the entry, where you're actually getting involved where the order flow area is concerned. And step 4 is the exit, where you can just cut a trade. And this was indeed the play. This was indeed the play. Where it delivered with anything either like an hour or just 45 minutes, to be honest. Within an hour or just 45 minutes of the entry being tagged. So what it means now is more or less figuring out or reviewing the trade. And you can see that this one fit the system explicitly because it was absolutely clear in regards to all the different components and all the sequence of events that had to happen before I could actually click a button to get into. And this was the only trade I took for the entire week. One trade, this was 5.84%, and it was calm as ever, understanding the intention I had set out from the weeks, or let the week before the week even start, and understanding what it means to frame the idea and then to figure out how you can get involved based on the components of the actual system. So now this is where more or less this is where more or less it gets a bit interesting, because coming into Friday, the intention was to still play towards liquidity lows, because as I said, the idea was already framed. It was just about how you're getting involved in prices delivery. And what's interesting as well is that more or less when we had this low, this little switch in order flow, some would presume that, you know what, we could go down, mitigate lower, and play to this liquidity, but with the already established directional bias, then you know the idea to run lows and continue running lows. That's indeed the idea, to continue running lows. But where the idea is to actually continue running lows, where it gets more or less validity, is from how you're viewing like the higher time frame, so to speak, or say the 4 in this case. So I use this as like a higher time frame. As per my methodology, the moment I realize previous order flow ranges that I look to play from are being like disrespected in regards to bullish order flow ranges not holding or holding up price anymore, then all of a sudden it speaks to me that liquidity lows, or the lows for the previous bullish order flow ranges, will become targets. And you can see how this play out. I think I done a video. I mentioned this in a video already. Throughout the previous week, why it is that I was actually more inclined to play short rather than continuing long. The intention is to play long when longs are warranted. And no, shorts are the ones that are warranted, not longs. So I wouldn't be messing around trying to play longs. As say, for example, if I try to play long right here, calm -1. Try to play long right here, calm -1 as well. Because it's like you're forgetting the first step in the actual sequence of events, which would be framing the actual trade idea. Having a directional bias, like that is the main reason why I was short as opposed to playing longs. Longs are just not it, man. That's the honest truth. Longs are just not it. But coming into Friday, the idea still stand. Playing lows, playing towards lows. But you can see this order flow range liquidity high is indeed, let me remove this, but it's indeed still intact. So it's speaking to the fact that, you know what, we could still be playing short to the order flow range liquidity low. We could still indeed be playing short, you know. And that's where I reckon it kind of gets. A bit interesting. For now. Yeah, so what he's saying, so now it's late. Yeah, what he's saying. So now it's late. Trying to figure out how you can actually get involved in prices delivery. That was more or less the next step. Figuring out how you can get involved in prices actual delivery on Friday. But you can see how I viewed it. It was this low to go as the reverse in order flow. And then we obviously get like the different criterias to validate the actual range. But you can see like coming into Friday, it never got any. So Friday wasn't a trading day, or wasn't a day a trade was placed. Only Thursday. Throughout the whole week, it was only Thursday that the actual trade was placed. You see, we eventually got a low going here, and in my pre-session analysis for Friday, the expectation was the price to come up, run this high, play from the R flow area here and just play downwards. Obviously go up, and then play downwards. That was the expectation, but you can see that it never delivered. It never delivered in such a way where it's like you get an entry. You just get a delivery. And in such cases, it's extremely calm. Why is it calm? Because it means that you're playing within a set criteria. You're playing as though you know how to play and know how to operate in a professional way, so much that you don't just mess around in any type of price. They say, for example, the first few days of the week, where it's like, yeah, it still deliver, but who cares when it isn't clear enough, or when it isn't properly congruent with your actual system. Like who cares in those instances? Playing the important points, or playing the important moments in prices delivery, whereas congruent with your system, that's where it gets cracked. If I'm being honest, that's exactly where it gets cracked. Knowing under which conditions you can operate within, and more or less like having experience, and experience lending to a certain level of discretion, even though you have like a systematic model, it still keeps you out of positions where like these where it's like it there but not there. One of those situations. I just play the trade actually there. So that was my week in review. One trade taken, 5.84%, 100% win rate. It is it is interesting because there's only one trade, but we move. And first trade for this week was on Thursday, and then the second trade for the entire month. The first trade for me was on April 1st. That was a -1. Now this one, I'm more or less blood out the -1, playing according to the data collected with the system in regards to the average return on the month, the average win streak, the average loss streak, these type of metrics that I tend to track. But something for another video. But that was all, and I hope you have a good one.